You're listening to AI PRISM from Seoul Economic Daily.
It's Tuesday, May 12. I'd like to share some thoughts about early career. If you're building a career at a Korea-adjacent firm right now, the ground rules are just completely changing.
Yeah, they really are. I mean, we're talking major shifts in compensation, job security, and, well, even where you end up living.
Exactly. And we're doing a deep dive into these exact shifts today. Let's start with compensation. Never just settled a 5.3% wage increase.
Right, yeah, which feels like a pretty peaceful benchmark for Korean tech this year.
Yeah, so if 5.3% is the peaceful baseline, I guess the question is, why is Samsung Electronics, on the brink of a historic May 21 strike?
Well, it's because this isn't your typical negotiation over base pay. I mean, for decades, Samsung was famously union-free. Now the union wants a formal written policy for a 15% operating profit-sharing cut.
Oh, wow.
And get this, with absolutely no cap.
Wait, 15% with no cap? That just sounds completely unsustainable for a hardware company, doesn't it?
Yeah, it's a huge ask.
I mean, they rely on massive R&D cycles just to keep up with Apple and TSMC.
Exactly, and that's management's entire argument. So they countered with a 6.2% base raise, a 10% profit pool specifically for the Device Solutions division, and a low-interest housing loan of up to 500 million won.
Which is what, roughly 350,000 US dollars?
Yeah, about that. But, the union knows they have immense leverage here. Semiconductor manufacturing, it's not like an assembly line you can just switch off for the weekend.
Right, because if you shut down a fab for even a couple of days, you just ruin months of microscopic wafers mid-production.
Spot on. And that continuous cycle is why JP Morgan estimates a strike could cost them 40 trillion won.
Wait, 40 trillion won?
Yeah, so roughly 28 billion US dollars in operating profit. That's why clients like Apple and HP are getting so nervous about their supply chains.
Yeah, I bet. It really creates this bizarre paradox,
Yeah.
Like tech giants are fighting over massive profits, but then you look at traditional retail and the dynamic completely flips.
Oh, totally. Just like at Homeplus, they're a British-Korean retailer currently in court receivership, and they just rolled out voluntary retirement terms. It's basically a game of corporate musical chairs, but the music is slowing down.
Right. And your safety net when the music stops just depends entirely on your tenure.
Precisely. I mean, if you've got over 20 years of service, you get 12 months of base pay. But if you're early in your career,
Yeah.
under 3 years of service gets you just 3 months pay, and then you're pushed right out into a brutal job market.
Wow, just 3 months. It really shows how sector-dependent job security is right now. But speaking of security, there's another liability hitting the executive suite, right? The Serious Accidents Punishment Act.
Yeah, this is a really crucial piece of Korean law. It basically holds CEOs personally and criminally liable for workplace fatalities.
Right, which used to feel a bit more like a conceptual risk, but now the Supreme Court is actually finalizing formal prison sentencing guidelines.
Exactly. So the ambiguity is completely gone. If you're in operations or manufacturing, this brings a very harsh predictability to executive liability.
Which has to change the whole calculus of risk for upper management. And, all these corporate realities kind of trickle down to your personal choices.
Oh, absolutely. Like where you put your money and where you physically build your career.
Right. Let's talk about the money side. Korea's main stock index, the KOSPI, has these wild forecasts right now pushing up to 12,000.
Yeah, but we really need a serious caveat there.
Oh.
Just as an observation, not buy or sell advice, the KOSPI is up 78%. But the growth is deeply skewed. If you exclude Samsung Electronics and SK Hynix, the rest of the market is only up about 30%.
Oh, interesting. So if your portfolio isn't heavily indexed in those two tech giants, it's just a totally different financial reality. The market concentration is immense.
It is. And, that intense concentration applies to geography, too. We see this massive capital area concentration.
Which basically means half of Korea's economic activity is just jammed into Seoul.
Right. Exactly. Half the economy, top-tier jobs, infrastructure, all crowded into Seoul and its immediate surroundings.
Which means brutal competition for entry-level jobs, terrible commutes, and housing prices that make those 500 million won loans absolutely necessary just to get a foothold.
Right. So to combat this, the Ministry of Economy and Finance is rolling out expanded regional tax incentives.
Oh, to push companies out of the city.
Basically, yeah. They're offering significant financial breaks to companies if they invest, conduct R&D, and crucially, if they hire talent outside the Seoul metropolitan area.
Which leads to a really provocative question for you to mull over. We know the powerful gravity of Seoul, the networking, the density of opportunity. Will these new regional tax incentives actually be enough to pull early career talent away from the capital? Or is the pull of the center just too strong to break? That's today's AI PRISM, early career. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI PRISM is a Juan Eifer award-winning series. We'll be back tomorrow.
You've been listening to AI PRISM from Seoul Economic Daily.